camera. The actual Senate feed is on here. We're hearing from one of the whistleblowers right now. We're going to hear from several of them, I believe, during this. First, he was basically had to go through why he decided to blow the whistle, what his concerns were. Now he's getting cross-examined. So it was interesting to me. I was actually surprised how slowly his concerns were. Now he's getting cross-examined. So it was interesting to me. I was actually surprised how slowly it's going today, because each side only has 27 hours, which doesn't sound, it does sound long when you say it, but chop that up. You're looking at like 4 days to get through it all.
And we remind everyone that Ken Paxton's wife is a member of the Senate, recused from this case, but still in the chamber watching this all unfold, Julie. What that must be like for her.
I think it's got to be very difficult for her, although she has appeared fine during this. She certainly puts on a good front, but you have to have that knowledge that everyone's watching you watch it.
Exactly. All right, Julie, stay close to us on this one. Julie Fine, our Dallas bureau chief, with us on Sound On. Big thanks to everyone for chiming in on the fastest show in politics. I'll meet you back here tomorrow on the radio and on YouTube. Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
Good afternoon, everyone. Live from the Bloomberg Interactive Brokers studio. We're streaming on YouTube. We're on Bloomberg Originals. It's Wednesday, September 6th, 2023.
Traders. How are you doing today? I'm going to place an order to buy euro. Okay, the price I'm looking to buy 107.24. This is kind of close, quite close to the actual price. So if you want to trade euro, here is your chance, and you can place an order at 107.24. Okay, guys, I'll speak to you later. Stay safe.
We're going to dive into them in detail in just a few. In general, stocks pulling back, yields climbing. This after a stronger than expected reading on the U.S. services industry bolstered speculation that the Fed is going to keep interest rates higher for longer. We are off of session lows. This afternoon, we did get the Fed Beige Book survey of regional businesses, and it showed that growth in the U.S. economy and jobs market slowed in July and August, and many businesses expect wage growth to ease broadly in the near term. Over the next few hours, we got a lot of great stories. The clock is ticking, Simone. More than 70,000 childcare programs in the U.S. are estimated to be in danger of closing. We're going to tell you why.
Yeah, and you know those cheap domestic flights we've been talking about? Don't get used to them.
That's too bad. I just bought some tickets, and they were like crazy cheap. I thought we were, back in the old days again. Yeah, not happening. Also in the magazine, Simone, would you go visit Molar City?
Guys,
It's the
open and 107.24. Okay, stay with me. If you want to trade euro, stay with me. We'll close this trade together. If I will hold overnight, we usually keep our stop loss at 2 pips above our entry level. So keep a close eye, and you will make decision. If you got our strategy, if you use our strategy, you will figure out how to sell. If you want to get the strategy, you need to go to our website, or you can get from our streamer. You can find the website, and basically you need to purchase the strategy. Otherwise, you can just copy trade and stay with us. Stay safe. I'll see you later.
Who was there? The Dow down half a percentage point right now. The S&P 500 down 0.8%, while the NASDAQ really lagging, down by 1.2%. All this to come. First up, let's bring in our TV colleagues as Bloomberg's countdown to the close starts right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Romaine Bostick alongside Katie Greifeld. We're joined right now by our colleagues Tim Stenevec, Simone Foxman in today for Carol Masser. Welcome to our audiences across all of our Bloomberg platforms, television, radio, as well as originals. Tim Stenevec, take a look at the market for me and tell me what you see.
Oh, I see a lot of red. What do you see?
Pretty much the same, Tim. So we're on
okay.
the same. I just wanted to make sure your Bloomberg terminal was working.
It's working.
Because yesterday it was a little off.
It was a little off.
Yeah.
I had to reset some screens, do some commands. I got it all figured out.
just
Don't worry
reboot.
about me. I have a question for you, Romaine.
Oh.
Where is the
Connection
S&P 500 going to be at the end of the year?
Well, me personally, I don't know, but if you believe Wall Street strategists, it's going to be lower than where it is today.
Do you believe the Wall Street, the sell street, or the sell side rather of strategists, or do you believe, you know, the investment managers, the buy side? Who do you believe?
You know who I believe, Tim Senator? I believe in a higher power.
Wow.
I was wondering where you were going with that.
Yeah.
I got nothing on that for you, but we got a great Bloomberg
And I've been trying to get that
story,
interview for
Simone, that
50
talks
years.
all about
So,
the different views that the same
Hard to
banks
get.
are actually taking when it comes to where they see the S&P 500 going. There's a lot of disagreement within the same houses this year.
Yeah, I mean, most visibly, we're looking at Morgan Stanley, where we have Mike Wilson saying stocks are going to be down by about 10%. But on the investment management side, at Morgan Stanley, Andrew Sliman saying stocks are going to rise as high as or S&P rise as high as 5,000.
This year or on a 12-month basis?
I believe by the end of this year.
Yeah. Because, I mean, to your point, I mean, it's like, I don't know. I mean, when you look at the gains on a year-to-date basis, and then you have to ask yourself, I mean, what would materially add to those gains over the next 4 months, or 3 months, I should say, really, over the next 3 months?
I don't have a good answer, but it is kind
Is
of
something
fun.
happening that I don't know?
Potentially. I don't know. Ask God. But in any case, I believe theoretically in Tom Brady. Apparently, Delta Airlines does as well. We're going to pivot here because of all the airline news that we're following today, higher jet fuel costs. Delta was also out with a piece of news that they're naming Tom Brady as a strategic advisor, a brand advocate. He's theoretically going to help develop training and, quote, teamwork tools for employees.
For what? Tom Brady?
Yeah, exactly.
Okay. Yeah. I don't know. Do we have time where I could just rant about
we
Tom
do.
Brady?
Absolutely.
I think you have about
Yes.
90 seconds.
I'm sort of confused by this. I mean, I understand why this is good for Tom Brady because I'm sure he's getting a nice check out of this. I don't quite understand what Delta gets out of this other than, I don't know.
Hey, we're talking about it.
Yeah,
Okay.
That's what they
true.
get.
Yeah, but
Well,
you're going to buy a
my
ticket
question.
because Tom Brady's on board?
Do you
Is
think
Tom, you know what? You know what?
I know where you're going, Romaine.
Put Tom
The
Brady
answer's
down
no.
on the tarmac and get those planes into the gate. Get my bag out onto the carousel. Can he do that?
I think
because
you
they
just
seem to be
designed-
having trouble over
Is he
there
gonna
at
train-
Delta doing
train
I
that.
think
the
you
pilots?
just sketched out the perfect marketing, the perfect ad.
But
for
they need
Delta.
the team. I mean, isn't that the problem with some of the airline issues that we've seen at airports and stuff? It's not having all the team on board and enough people that you need. Maybe he'll help.
Well, maybe Tom Brady will recruit some
Well, that's
people.
again, that's
Where's
what he's-
Gronk? Maybe Gronk can get out there
Do you,
and grab some bags.
Katie,
He's
do
a
you think
strong
that the
guy.
next time you're on a Delta flight, you're going to sit down and Tom Brady's going to be next to you?
I would imagine that he's going to be on the screen, right? The little video that they play beforehand.
Somehow I don't think he's flying commercial.
I don't think
don't
so
think
either.
so.
You know, we had this same conversation in our show meeting when we were trying to dissect this.
We've been talking about Tom Brady all day long.
It's an ongoing
I mean,
conversation.
he is
I
dreamy,
mean, I'm
but,
pretty
you
sure
know.
I saw Tim Tebow in the subway once. But frankly, what Tim and I were talking about earlier as well was,
Simone.
the price of airline fares is going down. Maybe you have more opportunities to sit next to Tom Brady because the airline's also looking at a bunch of nasty negative things potentially coming up, higher fuel costs, et cetera.
Oh, that is what I call a perfect tease because we're going to be
tried.
talking to George Ferguson a little bit later, all about the perils that airlines
I saw
face.
Aaron Rodgers driving by in an SUV.
Really?
No
Yeah.
kidding.
Oh,
Yeah, it was very fast.
okay. All right. Hey, I know we could talk about this for the next hour,
We could.
but
Isn't that what we're
I'm being
gonna
told
do?
we can't. I'm being told we
okay.
can't.
All right.
Don't go anywhere though, because in less than an hour we're going to be all back together. We're going to be live on TV, radio, and on YouTube for our Beyond the Bell coverage. We're going to take you through today's market close. We'll see you guys in just a bit. Index rising to a 6-month high in August. We also just got headlines from the Fed Beige Book showing that growth in the U.S. economy and jobs market slowed in July and August, and many businesses expect wage growth to ease broadly in the near term. We've got a great roundtable this afternoon to discuss. Molly Smith is economics editor for Bloomberg News, and Abigail Doolittle is markets reporter for Bloomberg News. They're both here with us right now in the Bloomberg Interactive Brokers studio. Abigail, I want to start with you because I got this email from you a little earlier. Confession. it wasn't just me who got the email, it was our entire newsroom. And I love
Send out a lot
Abigail's
of
emails because they always point out something really important. And today's important bit of news is that we're now seeing the S&P 500 back below its 50-day moving average. So talk technicals here and why this is significant.
Yes, so it does stand out. Sometimes you'll see a technical move that is flashy in terms of words, but might not actually mean anything. But in this case, we have the S&P 500 back below that 50-day moving average. That basically means that the downtrend in August, where we were on pace for the worst month of the year, but then there was a little bit of a reprieve of the recent rally for stocks into today, basically over the last 3 days, into the month of September, that those buyers are giving up. And over the last 2 months or so, the S&P 500 is stuck in an area of congestion, a trading range. That essentially tells you that there's a battle between the bulls and the bears. Neither the buyers nor the sellers have more information or enough confidence to break the range. But there's something interesting about this range, which is because the buyers have given up, at least right now, and are back below that moving average, it suggests to you that we're going to go back to the bottom of the range. Those levels are equal, whereas the last high is a lower high. So that gives some intel on the idea that the buyers have less confidence than the sellers. The sellers are waiting to pounce because at the end of the day, a range really doesn't matter. It matters how it breaks. So right now, this range appears as though it could break to the downside. What makes all of this so interesting, and to set it up a little bit for Molly, is the fact that we're going into the Fed meeting later this month. It's sort of the perfect amount of time between now and that Fed meeting around that time to come to the bottom of the range. I'd be shocked if the range broke before the Fed. Now, I think most people are thinking that if there's a hike, it's going to be in November, not in September. But the pressure that we're seeing in terms of yields higher, the dollar higher, it seems as though we're going to see the risk rally that we've had over the last week and a half cool, and we're going to go back to what we saw in August. And of course, September is the most difficult month for the S&P 500 on a seasonal basis.
Right. Well, Molly, explain to me a little bit, because we got this beige book out talking about how growth is moderating. Isn't that what we wanted? Isn't that this perfect Goldilocks scenario?
The soft landing.
The soft landing that everyone's been aiming for.
I think so. I mean, I took it to mean a positive in that line that growth slowing, hiring slowing. I mean, it is a little bit weird to say growth slowing when we're about to get this very hot third quarter GDP print.
But then we see two-year yields accelerate, over above 5%, which I thought read higher than we're currently thinking for longer from the Fed. I mean, how does this change the dynamic?
Yeah, I think it still just points to the idea within the Fed right now is that the debate right now is not necessarily just how high, it's for how long. So I think it's also how much higher too. And to Abigail's point that there could be that second hike flag this, that could be coming in November. So I'm really looking forward to the Fed meeting in a couple of weeks. We will get the updated projections for the third quarter. We'll see if they still have that next hike penciled in.
So Molly, don't you think today's move is more so about ISM and less so about what we saw with the beige book? Because
I mean, also from a timing perspective too.
Right.
Yes,
it's been lower. Stocks have been lower all day.
Right.
But also, the ISM or the beige book didn't do anything to ease the concerns about that ISM service is never coming in so hot.
Yeah, and I think it's right. No, the market reaction was definitely consistent with the ISM report, which we saw that services gauge accelerate to a 6-month high. And in some ways, I mean, I don't know. I'm honestly not so worried about that in the sense of like this is going to reignite inflation or really keep like services so exponentially hot, because I think that the trend still holds right now that it's been above trend, but it's still been coming down. So I'm not particularly worried about seeing that from a perspective of could inflation potentially reaccelerate, or is this going to maybe lead to a delayed or harder landing of the economy? Of course, we can't also infer that from 1 month of data, but sure. I think this is also when you look at the broader trend that the beige book captures, which is beyond just services in the economy, this still points to like a gradual downshift that we've been seeing.
Abigail, I'm wondering, one of the things that we were hearing about a lot from consumer companies as well as from analysts is the revival of these student loan payments that's going to come in the next couple of months. Are Are we kind of all set for that in respect to the market?
That's an excellent question, Simone, and I don't know the answer. I don't know that anybody can know the answer. At the end of the day, in terms of the fundamentals and how they connect to price action for stocks, I would say the Fed is the #1 driver by far. And one way to look at that on the year is the fact that the Bloomberg Dollar Index right now is up just 0.7%. You have yields higher, but other currencies are down sharply. So people were thinking that other currencies are down so much, or could think because there's dollar strength. There really isn't dollar strength on the year, but relative to other central banks and economies out there, I would compare it almost to saying that it's the best house on a bad block. Now, relative to those student payments, you know, is that a piece of this weakness? If I had to guess, based on my more time watching markets than I would ever care to admit to anybody, I would say probably not. It's really not a well-telegraphed event. I mean, we have heard a lot of management companies talking about it. So for people like us who are watching very closely, we are aware of it. And it's interesting how many different CEOs and management companies are talking about it. And I've even talked to analysts completely separately, and that's their big concern, and it has been for months. But is that truly reflected in stocks yet? I think that could be the kind of thing, actually, that range I was just talking about. If it didn't turn out to be the Fed or it didn't turn out to be some other expected event, that could be a big pressure point.
I mean, we talk about all the different drivers from here. And one of, as you brought up earlier, Tim, the story about how analysts on Wall Street can't figure out exactly what's going to happen.
Yeah, there's no agreement there. Hey, Molly, I'm wondering if there are any other nuggets in the beige book that caught your eye as you were going through those earlier.
Yeah, I know this report tends to be fun. You know, it does tend to have a bit more color.
I like anecdotal stuff.
We love a good anecdote.
Yeah.
This one is unfortunately not such a happy one, but it's something that I think gave me a little fodder to think about. This was coming out of the Dallas Fed District. That one nonprofit flagged that the expiration of SNAP benefits, so the food assistance program, the expiration of those benefits is now the top concern for seniors, aside from the cost of healthcare. And that's a big shift. Normally, healthcare has been by far the biggest concern for seniors in this country. So I think that's something really to consider going forward.
We're going to talk childcare in just a few minutes with Reed Pickert and what happens when we could potentially lose 70,000 childcare centers here in the U.S. Okay, please forgive me, everyone. I need to talk some tennis with
God
Molly.
Bless.
Okay, I know she's been sitting here
I'm gonna
waiting
have to sit
to
this
do
one out.
Yeah.
Feel free to chime in. Okay, what happened last night? Tiafoe, you were at the match. I was watching it at home.
You
I was
saw my
texting
prediction
you frantically.
not come true.
I thought Tiafoe was going to pull this off. After the first set, I texted you. I was like, why is he missing these easy shots? What's going on with his volleys today?
I just didn't see Francis bring the hype. You know, he's
Yeah.
such a big energy, big match player, and arguably Ben Shelton maybe is even more of one. These are both American guys. Ben Shelton's 20 years old and is now in his first career major semifinal, has a big task ahead of him in Mr. Djokovic on Friday. So good thing he's getting 2 days off before that. But yeah, I mean, Ben just really played the bigger points better. I think he had more of the crowd engaged, and Francis just didn't get into it the way we normally see him.
You stayed for the whole match?
Yeah.
Till what, 2:30?
No, it was done around 1.
Okay.
Yeah, bed
Well,
around
Molly,
2:30.
you have another
Yeah.
career for you.
know.
That was an
Boy.
amazing description.
And you got some wonderful stories.
Can I tell him?
as well.
Go for it.
Can I tell him?
Please.
Okay, so Friday night we go to we go to see the U.S. Open. I'm with Molly and a friend of mine, and Molly had just been on our program. So people who are listening know that she said, you know, my whole dream was to go to Syracuse and become a sports commentator, especially tennis. She's sitting there talking to the two of us, my friend and I, pulling out these facts from the last 20 years of pro tennis. During one of the changeovers, this guy turns around and he goes, who are you? Where do you work? And she introduces herself and he says, I work with Patrick McEnroe. Here's my card. You need to talk to me.
Wow, Molly.
Wow.
Incredible. Well, I believe it based on your play-by-play right here.
Yeah,
That was
so-
I'm
super
still sitting at this desk very happily, but just in case anyone from ESPN is listening,
You know what?
you know her to
For
find
2
me.
weeks a year,
Yeah.
you can come on here and talk about the U.S. economy and the U.S. Open. How's that?
It's the best.
And you can
combo.
write wonderful stories. Molly has wonderful stories about the impact, the importance of tennis, importance of women in tennis.
You guys are making my day.
Just tremendous.
Thank you so much.
That, of course, is Molly Smith, economics editor for Bloomberg News. Abigail Doolittle is markets reporter for Bloomberg News, joining us in the Bloomberg Interactive Brokers studio here in New York. We're just getting started on this Wednesday afternoon. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We're off session lows, but the Dow, the S&P, NASDAQ all in the red. 38 minutes to go now ahead of the closing bell, with the S&P down 33 points at 44.63. That is a drop right now of just about 0.7%. The S&P moving in further below 4,500. We've got the Dow down 186 points now. That is a drop of about 0.5%. NASDAQ down 100. 165, a decline of 1.2%. 10-year yield at 4.28% with a 2-year that's yielding 5.02%. Spot gold down $8 the ounce to $19.17, drop there of 0.5%. West Texas Intermediate crude up 1.1%, 87.66 a barrel. Brent holding above $90 a barrel, up today by 0.8%, 90.74 for barrel of Brent crude. Well, certainly traders, investors, and the Federal Reserve all keeping an eye on rising energy prices. Neela Richardson is chief economist at ADP.
Oil prices going up, even for a short time, just complicates this narrative for the Fed, right? It's the one part of the economy we thought we've had under control, that higher oil prices wasn't going to spill over into transportation costs or goods production. But yeah, the specter has risen again.
And you can hear more of that conversation with Neela Richardson on the Surveillance podcast. You can download it wherever you get your podcasts. Meanwhile, 3 U.S. airlines, United, Southwest, and Alaska Air, are all warning about the unexpected surge this quarter in the price of jet fuel, one of the industry's highest expenses. Shares of United, they're up 0.3%. Southwest down 2.1%. Alaska Air up by about 0.6%. Again, recapping stocks lower. S&P down 32, drop there of 0.7%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie, thank you so much. That's Charlie Pellet. Tim, one of the things, the consequences of the pandemic that's maybe one of the more positive bits that's come out of the past couple of years is that women in the United States have made historic gains in terms of labor force participation in recent months. The participation rate for women aged 25 to 54 in particular hit 77.8% in June. That is an all-time record since that data was started to be collected back in the 1940s. But now all of that might be at risk because $24 billion in pandemic-era government aid for daycare providers is set to run out at the end of September.
That's bad news.
Really bad news. I mean, it's such an important part of keeping women in the workforce. And so for that, I want to bring in Reed Pickert. She wrote this great story we have out on Bloomberg.com in the Bloomberg Terminal right now. She's the U.S. economy reporter, and she joins us from our Washington, D.C. bureau. Reed, first, tell me, why are daycares so on the edge and so dependent on this $24 billion worth of funding that's set to run out at the end of September?
So first of all, thank you for having me on. But if we rewind the clocks back to the start of the pandemic, so when we saw daycares close, schools close, and suddenly parents, both mothers and fathers, were scrambling to try to figure out what to do with their kids, we saw this huge decline in workforce participation among women ages 25 to 54. And what you saw as we moved on into 2021, we saw the American Rescue Plan really step in with this $24 billion set of money for these childcare providers to help them keep their doors open. And childcare providers could use this money in a lot of different ways. So some of the main things that you saw, for instance, were, keeping up with the rising costs as inflation, pushed up the cost of a variety of different bills that these providers had. You saw in the case of paying their workers more or hiring more workers to open up more spots, just because, a lot of lower paid sectors started seeing some pretty significant wage increases in the tight labor market. So childcare providers had a really hard time hiring and retaining their workforce. And so that's kind of the ways that these providers have used that money. And so fast forward to now, the Century Foundation estimates that, more than 70,000 providers could be forced to close.
Wow.
But I think even putting that number even more in perspective, closing is like, the worst case scenarios. So before a childcare provider closes, they're going to try all different types of things to plug that hole, whether that's raising tuition for parents that are already struggling to pay it, whether it's reducing hours, which, is something that has already limited a lot of parents' ability to, really participate in their jobs in the workforce, and where flexible working has really stepped in, or have to have less staff, which means way less childcare spots available for children across the United States.
Reed, one thing that was so surprising to me as somebody who pays so much money every month in childcare costs was how little childcare providers get paid. There's this value chain that occurs when a parent pays a child care provider, and I don't know where that money is going because the people who work there are not getting paid much. What's happening here?
So you're exactly right. Childcare is a profession that most people are in it for the love of the job, not for the pay. According to Bureau of Labor Statistics data, the average childcare worker made $14.22 an hour last year, which for perspective, a lot of jobs, for instance, somewhere working at Target, for instance, the starting pay, may start at $15 to $24 an hour. And so you can really see how these childcare providers, it's difficult to hire and keep these folks. But a lot of this goes into this idea of this broken system that we've heard people across the aisle talk about. And it really is this system where parents are really can't pay anymore. The providers are trying their best to pay their workers more. They want to pay their workers more, but they're paying a lot in terms of insurance and overhead and renting the space that they're in. And then at the end of the day, you end up in this situation where kind of no one's quite happy. And it's part of the reason that we've really seen more Band-Aid type efforts when it comes to the, Congress's role in terms of providing funding, just because the inherent system doesn't quite work economically.
Well, tell me about the change from before this money was initially doled out. Was this supposed to just kind of bring these childcare providers through this tough period, or was it to allow them to get back on their feet, or did it truly bring childcare to people who weren't able to afford it for their families before, and was that the intention?
So a mixture of all of these things. So I think the importance of talking about childcare is the pandemic shed a lot of light on how stressed this sector was, but it's been in a challenging spot well before the pandemic. And I think, in the case of looking at what this money in particular did, it really helped address the immediate problems the economy was facing. The economy saw this soaring prices, and so from a childcare perspective, that meant higher costs for rent, higher costs for utilities and electricity and groceries that they're providing the children at their daycare. It meant a tight labor market where it was even harder to offer someone such a low wage in comparison to all of these other sectors and expect them to stay. And so, this was a measure that was meant to help in the short term, but the reality that we're living in economically hasn't changed a lot. Prices are still really high. The labor market is still quite strong. And yet this money that helped them get through there isn't there anymore.
Yeah, sorry to interrupt there, Reed. But I mean, why don't politicians just look at this and say, wow, this is something we didn't know how much this money was going to do. Can't we, on a bipartisan basis, just fulfill this $24 billion measure? Why are politicians, why is this, I guess, even coming up? Why are we facing this childcare cliff, as it's been called?
So, like a lot of things in Washington, it's not so simple. This childcare is an issue that is a bipartisan issue and one that's widely supported by Republicans and Democrats. The way that folks feel that the sector should be supported differs based on who you ask. One kind of promising thing that we've seen is a bipartisan childcare caucus start to form with Representatives Ro Khanna and Nancy Mace, bringing more awareness to this childcare cliff and this affordability challenge. But you've also seen in terms of the appropriations bills that are now kind of getting caught up in the broader government shutdown mess. There is an increase in funding for what's known as the Child Care and Development Block Grants, which is a program that's been in place for a while. But the increase is, nowhere close to the $24 billion that we saw in the American Rescue Plan, but certainly will help to some extent, but is no way offsetting that.
So Reed, just in the last minute that we have with you, based on your reporting, and I know it's not your job to make predictions, but I'm a parent who pays for childcare right now. Give me a prediction of what you think happens at the end of the month.
So at the end of the month, nothing's going to immediately happen. This is a slow-burning challenge that over the next 6-12 months is when we start to see these centers start to close. But for parents, it means, particularly mothers, it means things such as cutting hours, switching to jobs that are less difficult, less productive, less time-consuming, and therefore often pay less, or dropping out of the workforce entirely, which would be really sad at a moment where women have really been leading this recovery.
I encourage everybody to check out this story. Threat of 70,000 daycare closures imperils U.S. workforce gains. Serious economic implications when we cannot take care of children in this country. The story by Reed Pickert and Kelsey Butler. Check it out on the Bloomberg terminal, of course, also at Bloomberg.com. Taking a look at the markets right now, we still see a sea of red. The Dow down 0.5 percentage point. The S&P 500 down 0.8%, and the NASDAQ down 1.3%. Let's now get a check on the latest world and national news. For that, we stay in Washington, D.C. Talk to Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hey, Nance.
Thanks, Tim. Fulton County Superior Court judge is ordering co-defendants Kenneth Chesbrough and Sidney Powell to stand trial together on October 23rd. The two attorneys had asked for their cases to be severed from one another in the Georgia election case. The state says the trial for each of the 19 co-defendants, including former President Trump, will take about 4 months, including 150 witnesses. This is Deputy District Attorney Will Wooten.
The state's position is that whether we have one trial or 19 trials, the evidence is exactly the same. The number of witnesses is the same.
Still to be determined is the trial date for the remaining 17 co-defendants. Senate Republican leader Mitch McConnell says he has nothing to add to a doctor's letter yesterday about his health, but that did not stop reporters from asking if he plans to step down.
Do you have any plans to retire anytime soon?
I have no announcements to make on that subject.
Well, what do you say to those who are...
I'm going to finish my term as leader, and I'm going to finish my Senate term. Thank you.
McConnell recently froze a second time during a news conference, raising questions about his ability to lead. It's official, this past summer was the hottest on record for the Northern Hemisphere, and it's not done with us yet. We get more from Bloomberg meteorologist Rob Carolyn.
August was 2.7 degrees above normal Fahrenheit, and July was just behind that at just under 2.7 degrees Fahrenheit above normal. Ocean temperatures, too, are running above normal. The global ocean temperatures are at about 69.8 degrees Fahrenheit. That's being helped by the developing El Nino, which is producing some very above normal water temperatures, particularly in the Eastern Pacific, but we have hot spots in the Atlantic and Indian Oceans as well.
Again, that is Bloomberg meteorologist Rob Carolyn. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long at Bloomberg. The Dow, the S&P, and NASDAQ all in the red. 20 minutes to go until that closing bell clangs on Wall Street. We are well off session lows, but stocks are declining. Treasury yields are climbing after a stronger than estimated reading on the services industry bolstered speculation that the Federal Reserve will keep rates higher for longer. S&P 500 index does remain below 4,500 right now at 44.65, down 32 points, a decline of 0.7%. The Dow down 178, drop there of 0.5%. NASDAQ down 164. That is a decline of 1.2%. We've got the 10-year now yielding 4.29%. The 2-year, 5.02%. Spot gold down $9 the ounce to $19.16. That is a drop of 0.5%. Bitcoin down $11 now, 25,696 on Bitcoin, a drop of less than 0.1%. Crude oil, let's begin with West Texas Intermediate, 87.66 a barrel, up 1.1%. A barrel of Brent, meanwhile, the global benchmark remains above $90 a barrel, 90.74, up by about 0.8%. Among the names scheduled to report earnings after the close of trading today, we will be hearing from GameStop. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Well, it's already that time of day. We're less than 18 minutes away from the close of U.S. equity trading here in New York. The Dow down, we just heard the numbers from Charlie, 0.5 percentage point. The S&P down 0.7% at 44.63, and the NASDAQ down 1.2%. Let's drive to the close with Eric Friedman, Chief Investment Officer at U.S. Bank Asset Management, joining us on Zoom from Raleigh, North Carolina this afternoon. Eric, good to have you with us. How are you?
I'm doing great, Tim. How are you today?
We're doing pretty well. My co-anchor today, Simone, raised a question earlier with our own Molly Smith on the economics team. And she said, you look at this, what we get from the anecdotal, I call it anecdata from the Fed Beige Book, the survey that it does of local areas around the country and businesses. And it seems like everything is great. What's not so great?
Yeah, I think there's a couple things that we have to think about. We've been using this analogy, Tim and Simone, of the Fed acting like that personal trainer sitting next to your treadmill and really keeping that ramp elevated. And so what I think you're seeing is that the runner is still doing well. It's still jogging and keeping up a very strong pace. The question is, how long can that pace continue? And we do think there will be more of an incremental slowing as opposed to just a absolute stop by that proverbial runner. So we'd expect the data to still be positive for the next couple of months. And there's lots of reasons for that. The labor market's in great shape. The overall wage growth remains strong. And so that gives, on top of the still accumulated stimulus savings, that gives a lot of fuel, if you will. I'll stop the analogy shortly, meaning without even saying it. But that's the sort of thing that we think will start to slow down as we get deeper into the, let's call it, holiday season and into the turn of 2024.
What about the holiday season or the changing of the calendar puts this pressure on the consumer or the overall economy?
Yeah, I think, Simone, there's probably a level of, I'm going to call it conspicuous consumption, the desire just to keep accumulating stuff. I think there's still this desire to go out and travel. There's still, there's more talk about the replacement cycle. Of course, 4 years ago, in a couple of months, that's when the COVID epidemic really forced so many people to be at home. And so the replacement cycle on goods starts to kick in, as well as just, again, making sure you're taking care of your mother-in-law at back to school, return to holiday shopping season, as well as just that cumulative impact of higher interest rates. Those should serve as that, again, proverbial, let's call it personal trainer, keeping the button up elevated for longer than anybody would like.
Now that you mentioned it, I think I am due for a new iPhone this year. It's been a few years.
iPhone 15?
I don't know. I don't even know what I have at this point. It still works pretty well. That's the thing. So maybe I'll go 3 years before I do an upgrade. Okay, so Eric, I know you can't talk specific equities, but let's talk sectors here. What are you doing with capital right now?
Yeah, one is that we're trimming some gains in technology, and that's not to say that we think technology is completely overbought. There's a lot of things that obviously comprise technology. We think that things like cyber, things like AI will remain in vogue, and so we just be again harvesting some gains there as opposed to just extending. And again, our long-term viewpoint is that you do want to have an outsized allocation to technology and probably healthcare. Those would be the two sectors that we favor on more of a enduring basis. I think the other thing that's really picking up of interest, at least on our screens, is energy. And that's a space that does spit out some cash flow. They've generally been very capital disciplined as a group. They've been forced to be capital disciplined. Shareholders have said, look, you can't have this Pavlovian response of just when oil prices go up, you go out and try to find more. That has really been reined in. And so you're seeing global demand still hang in there. You're seeing a more disciplined operating environment for E&P companies as well as R&M folks. And so that's a space we'd pay attention to. The last thing I'd say is Japan is looking more and more interesting. It obviously has had a good run already. There's all sorts of things happening within that economy that we think are attractive. So those would be a couple areas that would have on your radar screens if they're not already.
Yeah, on the energy front, I mean, we're looking at WTI right now at 87.65. That's some of the highest we've been in a long time. I mean, but a lot of that seems to be dependent on the Saudis, the Russians, rather than necessarily the oil companies themselves, at least the oil price. What do you look for when you look through the sector? What kind of companies stand out as winners versus losers?
Yeah, there's a couple things that we pay attention to, and you point out that the macro price of oil does not necessarily mean that the oil companies, again, whether it's the super majors or the exploration production or the refiners, are necessarily going to do well. So a couple things we pay attention to. Number one is, as I mentioned a second ago, that capital discipline. Are we seeing return of capital to shareholders? Are we seeing just blatant capex overruns? That has not been the case. We're very encouraged by that. Number two is, it's a related point, not to get too wonkish, but return on invested capital. So once people are being more capital disciplined, are they finding ways to actually turn that capital discipline into higher earnings per share? And that's something that we actually have seen consistently, particularly across the super majors. And that's an area that, again, without the ability to talk about specific companies, that's a space that we think has been the most disciplined. These are the groups that will benefit from, again, not that we want the challenges in Russia or Ukraine to necessarily be sources of profit, but one of the things we pay attention to is just what is the global response? And again, that response has been still a lack of supply relative to demand, which we think will carry on throughout the course of this year and potentially early next year. So we look at the super majors, that'd be a place we pay attention to. Also, some of those more disciplined exploration and production managers, those are also spots to pay attention to as well.
I want to ask my last question in a nod to Carol, who's out on vacation, and she can't get angry with me for asking you about the Fed. But how closely are you watching what the Fed does in September, and what do you think it's going to do in November?
Yeah, I think, Tim, it's the primary focal point right now. We're in that shoulder month period where we're pretty much done with earnings, and September 21st is looming fast upon us. And as the great Rod Stewart said, this is the time when I should be back at school. And again, we're all being forced to pay attention to what's happening with the Fed. So we think the bias is going to be a pause for this meeting, but also to keep optionality for the balance of the year. And so we do think that not just what's happening within core services, which remains sticky. I mean, that remains a sticky area, but also some of these non-core things. Right. Again, like you mentioned, Simone, seeing the oil price elevate, that's an issue that the Fed's going to have to reckon with.
All right, Eric Friedman, Chief Investment Officer at U.S. Bank Asset Management, joining us this afternoon. Really appreciate you taking the time. You're listening and watching Bloomberg Business Week on Bloomberg Radio.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Microsoft Xbox chief Phil Spencer says the software giant continues to work with UK regulators to work through the remaining hurdles to its $69 billion purchase of Activision Blizzard, and the company is confident it can get the deal over the line. Microsoft shares, they're trading lower today. We got Microsoft down roughly 0.4%. Activision up by about 0.1%. Chinese government agencies have reportedly banned staff from using Apple's iPhone and other foreign-branded devices at work. And with more on that story, here's Bloomberg's Ed Ludlow.
The Wall Street Journal reporting that some central agencies in China have issued directives via chat rooms and in meetings that they should replace their mobile device in the event it is a foreign device, not just an Apple iPhone, but a non-domestic device.
Bloomberg's Ed Ludlow reporting. While Apple does enjoy widespread popularity in China, foreign devices, however, have been long discouraged in sensitive agencies, particularly in Beijing in recent years, as China has stepped up a campaign to reduce a reliance on technology from the United States. Apple shares, they are trading lower today, down by about 0.4%. Among the names reporting after the close of trading today, we will be hearing from GameStop. And those are some of the top company stories that we have for you at this hour. I'm Charlie Pelletan. This is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. Tim Stenivek and Simone Foxman in this afternoon for Carol Massar. We got just a couple of minutes before the markets close. I want to go through a couple stories, Simone, that caught my eye this morning. You know, we talked a lot in the last few weeks about ARM's IPO. Can't call it a potential IPO anymore because this is definitely happening.
It's going to happen, yeah.
It's going to happen, unless something goes totally awry, Ian King said yesterday on our program. But for all intents and purposes, it's happening. A lot of the companies that we've talked about in the wake of that potentially doing an IPO would be Instacart. That's one of them. Another one is the maker of Birkenstock. Now we get the news today that the maker of Wilson tennis rackets has been said to file for a U.S. IPO.
Yeah, and could be valued for as much as $10 billion. This is Amerisports. Wants to raise $1 billion at least. Could end up seeking as much as $3 billion.
It's the primary focal point right now. You know,
it's sorry about that. It's interesting because I saw this story, Simone, and it looks like it's the company that makes everything that I like doing. So
everything that you like doing.
Yeah. So it owns not just Wilson tennis rackets, but it also owns Arc'teryx, the outdoor gear company, and then Atomic Winter Equipment, the maker of skis and more. So this is an interesting one. Bloomberg reported in December that Anta and its co-investors, Anta Sports Products, is it's China's largest athletic apparel producer. Private equity firm FountainVest Partners were considering an IPO of Amerisports. Deliberations are ongoing, and details of the proposed IPO could still change, the people said.
Yeah, and interestingly, because this consortium that picked up Amerisports for was about $5.2 billion back in 2019, but now it could be valued for as much as twice that. That's pretty interesting. I mean, it speaks to the interest in sports apparel and equipment, I think, overall. That said, I mean, the putter maker Saks Parenti late last month had a kind of troubling IPO when it was
wild.
That was wild.
It surged and then it fell. And this is a tiny company.
Pop and drop.
Yeah, pop and drop. A tiny company based in California. Hey, we are just a few minutes away from the close of U.S. equity trading. We're taking one last look at the indices before we join our TV team. The Dow in the red down 0.6. The S&P 500 down 0.7. The NASDAQ composite down 1% right now. Don't go anywhere because in just a few minutes we are going to be joined by our TV team for our countdown to the close and Beyond the Bell. This is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. We're counting you down to the closing bell. And here to help take us beyond the bell, it's a global simulcast with our friends Tim Stenovic and Simone Foxman in for a vacationing Carol Massar. Our audiences across all of our Bloomberg platforms, welcome to the show here, Tim Stenovic. Once again, we're going to do a quick check on your Bloomberg terminal just to make sure that it's working here.
Everything's
I
working
see red
properly.
across the screen.
Yeah, I see red across the screen as well. I want to thank you for fixing it yesterday after the program, Romaine.
Absolutely, that's what I do.
You totally got
when
it
the lights
working.
go down
During the commercial
and
break,
everyone
that's what he's
goes
doing.
home, I just stay behind. It's like
a man
I like
who
the
wears
Velveteen
many hats
Rabbit,
here.
just running around the department store.
Look, I think the tone was set early in the day when we got the economic data. There's not much economic data coming this week, but when those ISM services numbers came in hotter than even the analysts at the top end expected, Simone, the concern was, of course, the Fed is going to have more work to do, or at least stay higher for longer.
Yeah, certainly that the choice that seemed clear to markets at the end of last week isn't going to necessarily be as clear as it might have been. We're looking at 5-year yields back above, 2-year yields back above 5%.
Yeah, and you pause at that 5 number because it's the one that we've all been watching for, especially as you get a lot of corporate bond issuances. We were just talking with Julian Emanuel of Evercore ISI, and he was saying undoubtedly the flood of corporate bonds coming out is negative for treasuries as investors sell treasuries to make room for all this corporate credit coming on, and that kind of dictates where equities go next. For today, it's clearly to the downside.
Yeah, and I was looking at the correlations. I mean, the correlations between treasury yields and negative inverse correlation, actually probably the deepest that it's been for a good portion of the year here, too. So that's one of the reasons why you're seeing it. But interesting, Julian Emanuel was saying how that could actually reverse itself as we get deeper into the rest of the year here. Let's take a look at the equity markets right now, down for a second day with the Dow Jones Industrial Average slipping by about 200 points or about 0.6%. The S&P 500 down about 31 points or 0.7%, while the NASDAQ composite is going to close out the day lower by about 1%. And the Russell 2000, which yesterday was the big laggard, on a relative basis, is your outperformer, though still in the red, down by 0.3%.
Yeah, peeling back the layers of the S&P 500, 207 stocks moving higher today, 296 stocks, Scarlett, moving lower on the day.
All right, let's take a look at the sector performances here. And when we split the S&P 500 up into 24 groups, on the downside, you have tech, hardware, and equipment. That's really Apple dragging things lower. Auto and components off by 1.6%. That's Tesla. And semiconductor companies, NVIDIA, dragging that group down 1.5%. On the upside, no group has gained more than 0.4%. Consumer durable and apparel gaining 0.4%. Insurance and food and staples doing a little bit better.
All right, let's take a look at some of the gainers. Didn't have to look too hard to find some green. Actually, a lot when it comes to medicine here. Dexcom Inc. Up 6.5% on the day today. It's a medical device company that makes continuous glucose monitoring systems for people who have diabetes. This is interesting. An analyst from Jefferies comes out and said that the GLP-1 obesity drugs, we're talking Ozempic, Wegovy, and more, those appear to increase the uptake of type 2 diabetes continuous glucose monitors. That's according to a presentation from the company. Shares of the diabetes device makers have been pressured over concerns that these GLP-1 drugs will impact growth for the industry. Another story tied to these anti-obesity drugs in moving stocks today is Zimro Biomet Holdings, up 4.1%, also among the gainers in the S&P 500. This is a medical equipment maker, and it's the company CEO, Ivan Tornos, said that he sees rising demand for these weight loss drugs as a tailwind for the company. Here's why. He says, you've got a large percentage of patients here in the U.S. that are actually too obese to get some of these implants that the companies makes. They don't have the right BMI threshold. So if they take these GLP-1 drugs, then it'll be a tailwind for the company. And then Roku shares rising on the day today, up by almost 3%. It surged as much as 14% early in the day, gave up some of those gains. The company did say in a filing early this morning that it was planning to cut about 300 employees. That's roughly 10% of their workforce. It's going to consolidate office space. It's going to reduce its content portfolio. Basically, just try to save money. They're going to limit new hires as well. The company did warn last year that it expects a tough economy to pressure consumers and advertiser spending. And then remember back in March, it said it would cut about 200 employees, 6% of its workforce, as part of a restructuring. So a couple of restructurings there this year.
Yeah, well, it's easy to turn some of the negative news in the markets into some big declines in some of our specific names. AMC today, that was a big loser, down almost 37% after filing plans to sell up to 40 million shares of common stock. You may remember there was a lengthy court battle here, but a judge in Delaware sided with the company last month, and so the company is going ahead with those plans to sell those shares in an effort to raise money to improve liquidity, refinance. But in the filing noted, and maybe this is some of the negativity too, that the stock is highly speculative and involves risk. Overstock shares also down today, now ending down about 23%. This after the company gave a performance update. Remember, it had purchased some of those IP rights to Bed Bath & Beyond, especially bedbathandbeyond.com, and so done a relaunch. It's seen more customers and seen the number of orders increase, but its margins are maybe on the decline, so analysts trying to figure out what's going on there. Also, Lockheed Martin shares falling there about close to 5%, 4.75%. The company's needing to delay the delivery time of its most advanced F-35 jet. It was originally scheduled for December, now April 2024. And finally, Apple. There was that Wall Street Journal report out. This has been dragging on shares all day. The Chinese government agencies have banned staff from using iPhones, also other foreign branded devices. Admittedly, foreign branded devices have long been discouraged, but there was the biggest intraday drop here since August 4th.
When we talk about some of the moves, at least in the broader market here, of course, a lot of that was driven by the uptick that we saw in yields, most of that occurring on the shorter end of the curve, 6 basis points higher on your 2-year and your 5-year yield, about 3 basis points on the 10-year. Meanwhile, your 20 and 30-year yields actually dipped slightly here. But the big rise that we saw on the shorter end of the curve, of course, the more policy-sensitive end of the curve was obviously linked directly to that ISM services report that we got earlier today. It came in hot, certainly on the headline number, and the prices paid number also caused a lot of concerns, enough concerns, Scarlet Fu, that we actually did see the swaps market start to price back in expectations for a Fed rate hike this in November, about a 60% probability of that. Just yesterday, we were at barely a 50-50 chance of that, a coin flip.
Yeah, we also just got GameStop earnings out. I'd love to respond to that ISM number, but let's just take a look at the GameStop numbers right now. Second quarter net
profitable?
sales beat estimates. No, adjusted loss per share of 3 cents. Analysts were looking for a 14-cent loss, so that's better than anticipated.
Yeah, better than anticipated, Scarlett. Thank you. You're so short and sweet there. Shares a little higher here in after-hours trading here. And, of course, this is interesting that GameStop is saying that it won't be holding a conference call today. There it is. That's kind of interesting, too, the communication coming out. If you remember the last couple of quarters, their conference call was, well, let's just say brief. And, of course, we know this is now a quarter where this is the quarter where the CEO's gone. This is basically Ryan Cohen's ship right now to steer. And whether we're going to get some guidance on how he's going to steer it beyond what's in the press release, that remains to be seen, guys.
There's not much in this press release.
I know,
it's
I've already
literally
read it. Yeah, it's
just
like a pamphlet.
Yeah, there's, you know, it's so rare, Romaine, that you have a press release come out with zero commentary from the company's CEO or the CFO. There's not one quote in this
Can I just say the boilerplate is longer than the numbers they've provided.
Yeah, that's a really good point.
I mean, going into this, though, Wedbush analysts had said they thought that the results would be, quote unquote, fine. I mean, how much were we looking for here? I guess that's the question mark. Maybe while we're seeing the shares kind of fluctuate as they are.
Yeah, well, everyone's kind of scratching their heads, and we're not going to get a conference call to dig into everything. But, Romaine, you were talking earlier about the ISM services number and how hot they were. There was another data point today, I guess, the Fed's Beige Book. What was your takeaway from that? The way I read it was we're spending like drunken sailors this summer, high on concerts and everything else, Taylor Swift, Beyonce.
Yeah.
And now what? The rubber hits the road because everyone's paying back their student loans, and you got to tighten your belt. Is that the takeaway here?
Well, I thought it was interesting. I mean, you did hear in that report there was a lot of anecdotal comments about job growth actually moderating. There was a lot of anecdotal evidence here, though also that, well, a lot of those labor market imbalances still persist here, and the idea that price growth was also slowing as well. But it gets to the idea, I mean, just to link it back to the ISM, is I don't know if you can really pick a direction for the economy based on any of these data points, whether they're hard data or the anecdotal data in the Beige Book here. This is kind of I think an economy that is kind of what you want to make of it right now. Now, whether that's going to sort of come back and bite you in the behind down the road remains to be seen.
Yeah, I mean, I think back to what happens when those student loan payments restart and consumers, pull back on their spending as a result of having to pay that money each month. My big takeaway from the Beige Book was that things are actually looking pretty good in terms of what the Fed is doing. I mean, what the Fed has done is making its way into the economy. I think the big outlier today was that ISM services number.
Yeah, it'll be interesting to see when we get, I know we get CPI next Wednesday, right, a week from today, and then 2 weeks we get the Fed meeting where they're going to give their economic projections. That might give the market a little bit more clarity in terms of at least the way the Fed views the economy, and then of course what the Fed does.
What if the totality of the data also confuses the Fed the way that it confuses the market?
Then they're overpaid.
All right. And don't worry, we'll be covering it. And you guys don't worry, because we're going to be back tomorrow at the same time, at the same place. That is going to do it for Beyond the Bell this afternoon. Our cross-platform coverage of the market close on Bloomberg TV and radio, Bloomberg Originals, and YouTube. Meanwhile, catch us same time, same place tomorrow.
We've been talking about the health of the consumer, the future of travel in the holiday season, Tim, all afternoon. And one of the stories that really struck me today, and I think we saw the reaction in airline shares as well, was that the Southwest, United, and Alaska Airlines all warning of an unexpected surge in the price of jet fuel this quarter, because fuel is typically one of their highest expenses. So industry analysts have been predicting for a while that analysts are going to have to update their outlooks for the quarter, not just because of cost, but also about the consumer. But now it looks like they have had to do so. So Bloomberg Intelligence senior airlines analyst George Ferguson joining us to kind of go through the nitty-gritty. One of the things, George, that really struck me as well was also some of the commentary that some of the airlines had about what they're seeing in bookings. Do you think folks were most surprised by the fuel cost analysis, or was it by the weakness potentially of some of the domestic demand?
So my guess is most of it was fuel, and I think if you were paying attention to consensus numbers, you would have seen that fuel prices were abnormally low. We kind of watch Gulf Coast Jet, and Gulf Coast Jet's been moving up. It's $3 now. It was around $2 a gallon last quarter, so pretty steep move, 50%. But I still think that's the biggest driver. But we're continuing to see softness in fares as well. I totally agree. And a little more of that came out in the top lines with some of the disclosures we saw today. I think confirming some of this domestic weakness. But again, I think I'd go back and say the bigger issue right now is really these much higher fuel prices.
Yeah, so this is really interesting, George, because I was saying to our team this week and last week, looking at ticket prices over the next few weeks and few months, for coast-to-coast flights from New York to California and back, I was shocked at just how low some of these tickets were. I mean, you could get round trip for like $400 or $500, which, really in the last couple of years has been unheard of.
Yeah, I mean, really the bounce back has been very, very leisure focused, in travel. Some people would call it revenge travel. We call it a bounce back. And so that leisure travel is going to be very, very much focused on, these summer months, 2Q and 3Q. And so I think the challenge becomes now, business doesn't appear to be coming back, as quickly as we hoped. We still see a lot of folks, working from home. We're still hearing stories about consultants that aren't traveling out to their customers. And so I think that's having the effect on those fares now that we're getting into fall.
Is that a permanent shift, George?
Yeah, I don't want to say it's a permanent. I hate to say anything is permanent, but I guess I wonder a little bit if we take some of the top off business, because if we all decide that video conferencing has gotten good enough that you can hire a consultant and they can be wherever they want to be and work for you, and the party that's contracted them has to decide whether or not they want to pay money to bring them on site. I think we might feel comfortable enough now with video conferencing and things like that. We say, no, let's not bring the consultant in all the time, or bring them in on fewer occasions, and that's going to save some money there. I still think there's lots of parts of business that have to be done in person, but I think we might see the top come off some of that business demand.
Interesting. Take me through the consumer demand as well, because I think we saw maybe a surge of revenge travel domestically, and then that surge kind of fizzled out domestically, went to international, and that's what we saw this summer. Is there signs that that is weakening too? Is this sort of just the end of, all right, fine, we're finally post-pandemic?
I mean, I think we're going to have a hard time figuring that out for sure until we get into next summer, right? Because typically, these international travels planned pretty far in advance, purchased pretty far in advance, and so I think 3Q, most of that international travel is already baked in to results. Right, the tickets have already been sold. It's just what it's going to cost the airlines to deliver, and I think that's why we've seen the full-service carriers hang in there, even today, better on price action than we saw from the low-cost carriers. But what we've typically seen as markets have opened up, there's been this surge in demand as markets open up, and then, that surge wanes, they move to the next one. So I would expect that actually next summer you won't see this surge. Plus, I think I'd also, I think a reinforcement to that is that the dollar was pretty strong, and I think we really saw a lot of the demand into Europe from the U.S. on folks looking at that strong dollar. When I talk to people in Europe and they talk about coming to New York, they tell me how expensive it is to eat dinner in New York. Inflation is going to take a toll on that international traveler. So I don't see right now that surge coming back this direction from Europe, and I think the dollar is weakening a bit, right, going back closer to normal, and so that it may not be, that intensity may not be from our side of the Atlantic as well, that driver. Now, Asia Pac still has to open, but I don't typically think that's a strong sort of summer demand kind of thing as much as a friends and family travel destination, business travel destination.
George, can you settle this for me? The way that airlines buy their fuel, the connection to oil prices, and who hedges and who doesn't?
So sure. So, the folks that hedge, or the airlines that hedge, are going to be Southwest, JetBlue, and Alaska. Everybody else doesn't hedge, and they can only store so much, right? So they're buying, they're not buying in the spot market, but they're buying as they have needs from weeks to months. It's not anything they can buy long term and store up.
And how quickly would an increase in oil prices contribute to an increase in a ticket cost?
So, ticket costs are all about supply and demand. And so I would expect the airlines would want to be recapturing these increased fuel prices now. And if they could, they would. But my guess is that demand just isn't strong enough to recapture.
So we're not necessarily going to see higher ticket prices, even though airlines want them, because airlines are concerned the demand isn't there, at least domestically.
Yeah, I mean, I think, airplane is a really expensive asset to own. You don't want to put it on the ground and not fly it. So they want to fly the full capacity that they can fly, given the fleet. Plus, an airline's got some level of operating leverage. So the more flying that they do, the more they can push down costs. And there's a real drive to try to get costs down right now, because they've just given labor a bunch of increases, especially the pilots. So they're reticent to take off supply. And if you don't do that and demand's slowing, you're going to see fares fall. So yeah, even though the airlines may want to increase prices, I think they're going to be hard pressed, especially domestic, to get them increased.
Just quickly here, because we only have about a minute left, but we saw in our last CPI reading in August for the end of month of July that consumer fares were down 18.6% year on year. I mean, is there any chance we see that continue to a degree?
I think that there's going to continue to be pressure on airfares in the next CPI print. I don't know that it's going to be that dramatic, but I think you're going to continue to see pressure on it. And we saw very high correlation lately with those CPI numbers and airline yields, which is the price they get paid per mile they fly a passenger. It's synonymous with a fare price. Traditionally, it hadn't been that highly correlated. We think because there was more business in that mix, but it's been very correlated. So I wouldn't expect 18.6, but I think it will be down, maybe high single digits, and it'll be very correlated with fares.
All right, George, we're going to have to leave things there. Really appreciate you, as always, taking the time and joining us. That's Bloomberg Intelligence Senior Airlines Analyst George Ferguson joining us from our Princeton, New Jersey, Bloomberg Intelligence headquarters.
I hope the fare prices continue falling. Hey, I want to travel.
Yeah, I do too.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long at Bloomberg. Light on detail, no conference call, but a move higher after hours for GameStop shares. GameStop reported second quarter net sales of $1.16 billion. Estimates were for $1.14 billion, but again after hours, GameStop shares, they are advancing by just about 5.3%. A move lower for the U.S. equity market today, a down Wednesday with the Dow, the S&P, NASDAQ all declining 31-point drop drop in the S&P 500 index, ending the day below 4,500 at 44.65, a drop today of 0.7%. The Dow down 198, decline there of just about 0.6%, and we had the Nasdaq Composite Index down 148 points, a drop of 1.1%. Russell 2000 today lower by 0.3%, 10-year yield 4.29%, the 2-year 5.02%. Spot gold down $9 the ounce to $19.16, a decline of 0.5%, and West Texas Intermediate crude up 1%, 87.57 a barrel, but Brent, the global benchmark, remains above $90 a barrel, 90.66 for a barrel of WTI. Again, recapping, GameStop higher after hours, stocks lower, S&P down 31 points, down 0.7%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie, thank you. And thanks for joining us on Bloomberg Business Week. Tim Stenovic and myself, Simone Foxman. Now, I've just recently returned from the Persian Gulf, where I was a correspondent there for about 3.5 years. And frankly, since the start of the pandemic, there is no part of the world probably that's flexed its financial muscle like the Gulf. You know, bankers have been chasing sovereign wealth cash in Dubai. You know, you have a wave of Russians pouring in with their own assets, hedge funds, crypto firms. But at the same time, you know, you look farther out across the Middle East and into Africa, and the pandemic and the war in Ukraine have created sort of these devastating sustainability challenges for much, frankly, larger populations. And that's why I'm so excited to have Noor Swade with us. She's founder and managing partner at Global Ventures. And she makes investments in the Middle East and Africa. She's normally based in Dubai, but Noor's joining us now from London. So Noor, talk to me a little bit about some of the top investment themes for Global Ventures right now.
So first of all, thank you so much for having me and taking the time. For us, as we see kind of our part of the world, we take a look, as you mentioned, all of Middle East and Africa. We are sector agnostic, so we invest across all sectors. What's really exciting to us right now are two key sectors at this point in time. The first is anything related to supply chain disruption. And the second is anything related to food security or agri-tech. And our investment theses are always really thinking through 5 years from now, which industries are massively different to 5 years ago. So where are we at inflection points? What's interesting? Where can cutting edge technology impact hundreds of millions of lives in a very meaningful and financially rewarding way as well? So when we think about supply chain and what's happened over the last few years, we think about it all the way from material science, manufacturing, where we still import 90% of everything, and we want to start importing less, through to logistics. So drone logistics on a commercial level versus using old trucks on rickety roads. So when we think about the whole value chain of supply chain, you know, our reckoning is if we're going to build manufacturing for this part of the world right now, if we're going to really disrupt supply chains, we're going to do them the way of 2023. We're not going to do them the way of the 90s. We're not going to build manufacturing facilities that are old. It's going to be 3D printing, additive manufacturing. That's really one of the key areas right now, is how do we come into our own when it comes to manufacturing and supply chains.
Okay, so you talk manufacturing and supply chains, but you also said another area of interest for you is anything that has to do with food accessibility, food security. Talk to me about how you are able to, or working to grow food in the desert. I mean, what are the companies that you're investing in that allow for that?
So there's a few, and you know, one of them is very exciting because it's really at that intersection of food and energy. So one of the companies, Red Sea, really has found a way to reduce energy consumption for the purpose of vertical farming by 95%. By the way, they desalinate water. And this is really at the crux of everything, because the way where we are, there isn't arable land, so you want to do vertical farming. 5 years ago, vertical farming was something that was in proof of concept. We reckon 5 years from now, a lot of the food that's being served in the region is going to be farmed in the region in these new innovative ways. And yet one of the biggest impediments to that was how much energy costs and how much energy consumption.
Well, to explain that, because I don't think everyone knows what vertical farming is. It's the idea that you're stacking these crops on one another rather than laying them out on the ground, and they're in greenhouses oftentimes, and you need the lights and water in order for them to grow, right? And that's what makes them energy intensive.
And water is often the biggest energy consumer. So if you want to desalinate water, because a lot of these are hydroponics, so you need a lot of water, and a lot of the water that gets desalinated uses a lot of energy. And that's often the biggest cost factor. So as we move from a world where vertical farms or indoor farming and the way you stack them in hydroponics is still in proof of concept and commercially unviable, and you want to take that so that that's actually how you produce most of the food, you really need to reduce energy consumption. And that's actually something that's across the region. So when we think about energy consumption, you have 760 million people in the world without power, of which 700 million are in Africa. So when we think about how we consume energy and how we go down, building businesses that require less energy, not because we care about the planet, which we obviously do, but because it's better business, because you cannot scale if you're consuming huge amount of energy. And now that we've cracked some of these things, Red Sea Farms is exporting their technology and retrofitting farms in the US, retrofitting farms in Europe, because it's simply better tech.
Yeah, but I guess one of the challenges that you always face, especially for technology that would most benefit places like Africa, places outside the Gulf and the Middle East, is that the return is not necessarily there to put in a lot of R&D to produce food from places that don't have a lot of water, or to electrify places in Africa that have very low standards of life. I mean, can you talk to me about some of the ways that you are getting past some of these challenges?
So I think that's where the opportunity sits. So for us, as we think about these technologies that are available globally, and there is R&D in our part of the world a little bit, not as much as we'd like, but a little bit, there's that opportunity to leapfrog. So when we think about vertical farming, if we had wanted to do that the traditional way, or the way that it was done even just 10 years ago in North America or in Europe, that consumed a lot of energy, a lot of water, which wasn't available. So we had to leapfrog and think, how can we do this better? And the irony is that these are two scientists, one British and one American, that were sitting in Saudi Arabia in the desert and discovered that the way that the cactus plant desalinates water is much more energy efficient, and emulated that. But the concept of leapfrogging is something that's really important. So we don't have incumbents in our industries because the industries are still nascent. When you think about something like financial inclusion, just 5 years ago, 85% of the people in the region were not financially included. Now that's down to 55%. And we didn't get there by building banks. We got there with cutting edge fintech. When we think about healthcare, we have 1 doctor per 1,000 people in MENA compared to 4 per 1,000 in North America or Europe, and 0.2 per 1,000 in sub-Saharan Africa. We're never going to have enough hospitals. We're never going to have enough doctors. The question becomes, how do you use technology to give healthcare access? And therefore, you have the adoption of tech in a much faster way, especially given 60% of the population is under the age of 30. So your digital adoption is instant, immediate. There are no incumbents or lobbies from the healthcare industry or the finance industry trying to stop these tech companies, and the regulators actually want these solutions.
Right.
So you end up in a world. Sorry, go ahead.
Well, no, we only have a couple minutes left, and I want to make sure we get to the fundraising aspect of this, because we talk a lot about venture capital funding drying up over the last couple of years, and I'm wondering, from your perspective, as the founder and managing partner at Global Ventures, how much of your time is spent fundraising, and how hard has it been to raise money for funds?
So we are on our 3rd fund now, which we've managed to successfully raise most of this year. So we're very fortunate. I think our part of the world is still a great opportunity. Companies, because of the lack of the quantum of capital. So last year was our peak year in terms of venture funding at $3 billion for all of the MENA region, which is still a drop in the bucket of global venture. So when you think about $3 billion, is all deals all year across all the MENA countries. So it's a nascent ecosystem, it's fast growing, it's a very young population, and it's an emerging and growing economy. So most of our investors are actually international investors, institutions in the US and in Europe that want access to growth markets. And by coming in and looking at venture in the region, they find companies that are much more capital efficient because of the lack of capital in the ecosystem. A quarter of our portfolio is EBITDA positive, which for a Series A investor is highly unlikely in most other markets. And you're using technology to solve real world problems. So really the combination of that has enabled growth rather than shrinkage so far.
Look, I just quickly here, because we only have about a minute left, but I mean, look, there's so much money coming out of the Gulf right now. And you being based in Dubai, see that, probably have access to that others don't. I mean, what priorities do you have in funding projects, or what priorities those investors have in funding projects that other investors, elsewhere, sitting in the United States or elsewhere, don't?
So, when we're funding projects, we're looking purely at the technology. Our investors, as I mentioned, are 60% of our capital does not come from the region. It comes from the US and Europe. And people are really looking for where there are growth areas in the world where we can use tech to impact hundreds of millions of lives to get the returns we're looking for. Our founders are globally competitive, and yet the market's so nascent and young and small that valuations make sense. So I think that applies to regional investors, to global investors. I think people are just looking for great entrepreneurs building meaningful companies in growing markets.
Nor Swade is founder and managing partner at Global Ventures, joining us this afternoon from London, or I should say this evening from London. Nor, thanks so much for taking the time. Really do appreciate it. Let's get a check-in on the latest world and national news. Nancy Lyons is in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. U.S. prosecutors have told a federal judge in Delaware they do intend to file an indictment against Hunter Biden by September 29th. The move comes after a plea deal collapsed. Special counsel David Weiss issued his intentions in a letter to the court. The exact charges the president's son would face were not immediately clear, but he has been under investigation in Delaware on gun and tax charges. A televised hearing took place today in Fulton County, Georgia, concerning the election interference case. Judge Scott McAfee rejected a request from two co-defendants to sever their cases. The judge also asked for a trial timeline, which was provided by prosecutor Nathan Wade.
A trial of these 19 co-defendants will take 4 months, and that does not include jury selection. And it's also predicated upon whether or not, of course, the defendants elect to testify or not. But 4 months is our time estimate. In terms of the number of witnesses, there are in excess of 150 witnesses that the state intends to call.
The two defendants seeking a speedy trial will see their proceedings begin October 23rd, but no date has been determined for the other 17 co-defendants, including former President Trump. President Biden is celebrating a 6-year labor deal for West Coast port workers. He hosted the leaders of the two unions involved at a White House event today.
With this agreement, they're being paid what they deserve, and goods are moving quickly and efficiently across the country. Plus, this has a direct impact on reducing inflation.
The agreement includes a 32% increase for workers over the next 6 years. Pennsylvania authorities say inmate Danilo Cavalcante, who is still on the loose, escaped a Chester County prison by scaling a prison wall and climbing over razor wire. That wire had been installed after another inmate escaped in May. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
Facts, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long at Bloomberg. GameStop shares surging after hours, up now by 7%. GameStop reported second quarter sales that narrowly beat analyst estimates in its first report since the retail chain ousted its CEO. Sales rose to $1.16 billion, and in the quarter ending July 29th, that was ahead of the $1.14 billion average projected by analysts. But after hours, as we check the Bloomberg here, we do have shares of GameStop up now by 5.33%. Turned out to be a down day on Wall Street. The Dow, the S&P, and NASDAQ all declined. Treasury yields advanced after a stronger than estimated reading on the services industry bolstered speculation the Fed will keep rates higher for longer. Eric Friedman is Chief Investment Officer at U.S. Bank Asset Management. And right here on Bloomberg Business Week, he said right now the Fed is in the driver's seat.
It's the primary focal point right now. We're in that shoulder month period where we're pretty much done with earnings. And September 21st is looming fast upon us. And as the great Rod Stewart said, this is the time when I should be back at school. And again, we're all being forced to pay attention to what's happening with the Fed. So we think the bias is going to be a pause for this meeting, but also to keep optionality for the balance of the year.
And you can hear more of that conversation on the Bloomberg Business Week podcast. You can download it wherever you get your podcasts. Stocks lower, S&P down 31, drop there of just about 0.7%. S&P ending the day at 4465. The Dow down 198 points today, a decline of 0.6%. The NASDAQ Composite Index down 1.1%. 10-year yield 4.28% with a 2-year 5.02%. Spot gold down $9 the ounce to $19.16, and West Texas Intermediate crude up 1%, $87.59 a barrel. Brent up 0.7%, $90.69 for a barrel of Brent. Brent, of course, the global benchmark. Recapping, stocks lower, S&P down 31, drop there of 0.7%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hi, thank you so much for that update, Charlie Pellet. Really do appreciate it. Well, there's this great column from Bloomberg Opinion today. It's written by a professor at Fordham University. He's a theology professor, Michael Peppard. It's all about generative AI in the classroom. So when he first experimented with ChatGPT, he writes that he was not impressed. But that was before he played with the GPT-4, which was released back in March. And he actually found the newest version of OpenAI's multimodal LLM, large language model, can now produce papers that are better than the average students. So that's just between different versions of ChatGPT. So it raises a lot of questions about the role that generative AI should play in the classroom. How should teachers use it? How should students use it? How worried should parents be that our kids are not going to learn how to do anything because of ChatGPT? Hopefully Chris Callison-Birch has the answers. He spent years studying generative AI. He's Associate Professor of Computer Information Science at the University of Pennsylvania School of Engineering and Applied Science. He's a Sloan Research Fellow, and he's gotten faculty research awards from companies we talk about every day: Google, Microsoft, Amazon, Facebook, Roblox, and more. And gotten funding from DARPA, the NSF, and more as well. He joins us on Zoom from Philadelphia. Professor, how are you?
Great. Thanks for having me.
Well, thanks so much for joining us. So a lot of parents are sending their kids back to school this week here in New York, and other areas of the country. Schools started already. I know that one thing they're thinking about is, how is my kid going to be using ChatGPT or generative AI in the classroom versus how should he or she be using it? What are your thoughts?
Absolutely. So I was listening to a podcast this summer that speculated that there was a downturn in the use of GPT as a result of its being summer break. And the reason for that is basically ChatGPT is a homework machine. So we should see a corresponding rise again now that students are back in the classroom.
Is that okay? Hold on. That's like, is that a concern though?
For OpenAI or for us educators?
For educators, not for OpenAI.
Certainly. So when ChatGPT was released last November, it had this breakthrough moment where everyone suddenly became aware of it, and At Penn, we had this giant meeting of all the faculty where it was on everyone's radar as a potential concern. And I think we're now just beginning to navigate what are good uses of generative AI versus not good uses of generative AI. And I think that those are going to vary depending on what level of education you're at, whether it's high school or below versus college use, and also sort of what level of mastery students have achieved already. I think there's like an interesting analogy with using calculators in the classroom where you want students to build fundamental skills first before you give them a technology that allows them to replace those fundamental skills.
So are you going to allow your students to write essays with ChatGPT?
I am in a computer science department, so we have fewer essays, but we have an
well,
analogous problem with writing code.
Can ChatGPT write code?
ChatGPT can write code. Over the summer, I was using it and basically pair programming with it, and it's magnificent. Like, I think this is going to be a tool that enters into all sorts of disciplines and that becomes an integral part of how everyone does their regular job. And so I want my students to be able to use this technology, and I want them to be able to enhance their own skill set with it, but I want to make sure that I'm navigating it correctly. So in my mind, there's an easy distinction to make. So what we want to avoid is unthinking use of this technology. So if you simply ask GPT to write your high school essay or to complete my programming assignment, and you do it in an unthinking manner, meaning you just submit its output, that's clearly a harmful use of this technology where the student doesn't learn anything, we're not furthering their educational goals, and the output is crucially likely to be wrong in many interesting ways. These models are not perfect. They often hallucinate. So if you're a student listening to Bloomberg Radio, you're probably clever enough to make sure that you fact check everything that it generates.
So what do you want to see your students produce? And forgive my ignorance of code here. What do you want to see them produce using ChatGPT?
So I think that the analogy that I draw is essentially like, what kind of collaboration would I allow a pair of students to do? And so that kind of collaboration should be allowable between a student and the generative AI system. I wouldn't allow a student to copy directly the code from their friends without understanding it and without like thinking through and learning anything about how to do it. I allow students to discuss the problems and gain a better understanding, but not to directly copy anything. And I think the same could hold for generative AI. So you should be allowed to understand a problem, and I think that generative AI is really magnificent as a personalized tutor, so you could use it to explore a topic, provide examples of something that you're learning in class, and maybe you could use it for tasks that you've already mastered.
So we only have a couple minutes left, and I'm certainly a concerned parent. My kids aren't old enough to be doing homework at this point, but I know that if I were in school, this is something that we'd all be looking for help with when it comes to homework. So to remove yourself from the college professor and put yourself in the position of an 8th grade teacher or something, how do kids use this technology in a way that's actually productive and not just a crutch?
Right. So students shouldn't use this to complete their homework assignments for them. They shouldn't use it when it's expressly forbidden. But if you're an educator, I think there's lots of really amazing ways that you can integrate this into your classroom. There's lots of really great uses of generative AI for creative applications. You can use it to generate images, to help illustrate things, and really empower students to realize their creative visions in very exciting ways. My 9-year-old and I are designing a movie together, generating images using Midjourney, creating voices using 11 labs, and all sorts of things where we have this really spectacular creative project together. And I think that those could be transferred into the classroom as well.
That's pretty cool. Explain just in 30 seconds what Midjourney is and how you do something like that. It's like the ChatGPT for images, right?
That's right. So Midjourney is a generative AI that lets you input a prompt. So you could say a woodcut print of a cat playing a banjo, and it'll render that for you. And it's really amazing. So I totally recommend that parents try it out with their kids. It's great for imagination games.
Very cool stuff. Hey, Chris, thank you so much for joining us. Really appreciate you taking the time this afternoon. Chris Callison-Birch is an associate professor of computer information science, I should say, at the University of Pennsylvania's School of Engineering and Applied Science. He joins us this afternoon on Zoom.
Making your challenges so much, making your challenges as a parent so much more difficult.
I know.
Traders again. It's look like I will have to hold euro against United States dollar until tomorrow, because yes, we're already in profit, but it's not that much. I want to remind you that 1 pips we trade on margin, and 1 pips equals 100 pounds. So we have, if we purchased at 107.24, as you can see, it went to 107.26. We had 200 pounds. Right now, it's about 50 pounds. It's not enough. So I will hold this position overnight. I will see what's going to happen tomorrow, because this is, according to our indicators, the euro against United States dollar quite oversold, and probably for the next couple of days, it will go up. How much up? I don't care. We don't care because we're day traders. But I want to make profit on this, and I want to make bigger profit. So if you want to sell, if you don't want to hold overnight, just place an order to sell. If you copy trade, let's say at 107.25, you will have 1 pips in profit, and depends how much, what kind of margin you have. And how much you pay for your contract. This profit you will get based on 1 pips, right? Okay, I'll speak to you later. We will see what's going to happen tomorrow and how much profit we're going to get from trading euro against United States dollar. For some of our positions, you can find information that we hold over blue ticker. As you can see, it's written open positions. We have quite large position on United States dollar against Japanese yen, but it's short position. I don't really mind to keep them, because if you open short position, broker pays you overnight for holding this position. So we are not losing anything at all. Also, we have on Bitcoin as well, we have long position at 30,000 on Bitcoin. Maybe tomorrow we will purchase another contract on Bitcoin. We will see where it will lead, where price will lead us on Bitcoin. Anyway, have a nice evening, and I'll speak to you tomorrow. As always, we start from 8 o'clock UK time. Okay, guys, stay safe.
And it adds to lingering concerns about demand in domestic markets, lower fares, and rising labor costs. Southwest also says that unit revenue, a measure of demand and fares, would fall 5% to 7% from a year earlier, compared with a prior outlook for a drop of 3% to 7%. Industry analysts have been forecasting U.S. carriers would likely soon update existing financial guidance for the quarter, largely because of lower domestic fares and fuel prices that have climbed as much as 27% since the start of the 3-month period. Airlines have faced an increasingly uncertain domestic environment, caused in part by a surprisingly strong shift to international travel over the summer. Charlie?
And that's Steve Rappaport reporting. UAL down today by 0.3%. Southwest slumped 2.6%. Alaska Air up today by 0.5%. GameStop after earnings after hours up by 8.5%. Those are our top company stories at this hour, and this is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. I'm Tim Stenivek. Excuse me. We both have whatever's
okay.
going on.
Yeah.
It happens. I'm Tim Stenivek.
We're getting back into the fall.
That voice you hear is Simone Foxman filling in for Carol Massar this afternoon. Nancy Lyons will save us. She's in our 99.1 newsroom, and she's got to check the latest world and national news. Hey, Nance.
Thanks, Tim. An indictment of Hunter Biden is expected by the end of the month. That's according to documents filed in a Delaware court by special counsel David Weiss. Biden, the son of President Biden, had agreed in principle to plead guilty to federal tax charges and to enter a pretrial diversion agreement related to a gun charge. But that plea deal collapsed back in July. Prosecutors have not specified what charges they intend to file. Prosecutors in Fulton County, Georgia, say the trial alleging Donald Trump and 18 co-defendants conspired to overturn the results of the 2020 presidential election could last about 4 months with more than 150 potential witnesses. That estimate was shared during a televised hearing in the case where several defendants were denied a request to sever their cases. President Biden is taking a victory lap after a 6-year contract was achieved between the nation's unionized dock workers and their employers.
This contract proves that collective bargaining works. It gives workers a seat at the table and ensures that their well-being, security, and futures are a priority. And it also gives employers the opportunity to delivers for employers by helping them attract and retain the best, most productive workers in the world.
Biden hosted union leaders today at the White House. Now the spotlight turns to the United Auto Workers Union that could strike against the big three automakers by September 14th. Motivation among American workers is dropping, and a lack of engagement is causing a loss of productivity.
The ADP Research Institute unveiled its monthly Employee Motivation and Commitment Index and found engagement, resilience, and connection dropped to 100 in August. That's the lowest level since June of last year. ADP says values of 100 and lower signal diminishing engagement. The index offers a gauge of worker satisfaction on issues from pay to flexible hours to remote work, and it finds that overall 4 in 10 workers are rated highly productive. Amy Morris, Bloomberg Radio.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Tim and Simone.
Thank you so much for that update, Nancy Lyons. Really do appreciate it. Okay, I told you, Simone, I'm going to spend as much time talking about tennis as I can these 2 weeks.
Okay, as a complete novice, explain to me, what is it like? Because
to be at the U.S. Open?
Yes.
Oh, so you've never been?
I sang at the U.S. Open once as a child.
Okay.
I sang like the national anthem.
That's really cool.
But
hold on.
That was a good 20 years ago.
Okay, so it's been a while. You know what's funny is things 20 years ago at the U.S. Open were a lot less expensive than they are now.
I can imagine, and it's not just inflation, I'm guessing.
It's not just inflation. It's the fact that things have gotten a lot more expensive. There's a great article by our own Jillian Tan and Catherine Doherty. Catherine, I believe, was there last night, if my Instagram did not lie, watching that match. They read a story about how expensive it is this year. So courtside seats for the men's finals are being offered at over $20,000 a person on resale sites.
And is that like the club seats, or is that like the nosebleeds?
No, that's like those are
like
courtside. Those are actually good seats. Don't worry. Like for $20,000, you are getting like a very good seat. You're going to get sweat on, I believe.
Wow.
Courtside.
Wasn't there someone changing his shirts all the time?
Yeah, that happens a lot these days.
Okay.
A lot of players now are not wearing sleeves on the men's side. Yeah, Francis Tiafoe, Carlos Alcaraz not wearing sleeves. Okay, grounds passes. So you can buy the grounds passes where you watch the what's going on outside of Arthur